How's it going, everybody? It's Stas here. So I wanted to do a quick Beyond Meat stock analysis video today. I want to break down some technicals, look at the charts as always, and I want to dive into some financials and some ratios to see whether or not this company is overvalued, undervalued, or somewhere in between. So sit back, relax, take a sip of your coffee, smash that like button, get your 2 stocks from Webull and your $30 from M1 Finance. Those are free, link down below, and let's get right into the video. So today we have Beyond Meat exploding. Today it's up 11%, up almost $12 per share, and this is on an upgrade. This is on an upgrade from Bernstein, however you want to say that. They upgraded the stock from underperform to outperform, and they announced a $130 price target. And ever since that point, well, the stock has gone bananas. We closed at 106 on Friday. Now we just hit a high of 119. And like I said, it's up 11% so far on the day. And in my opinion, it's about time we're seeing a relief rally on Beyond Meat, considering it hit a $230 high a couple months ago, back in the end of January. I believe that's after they got that Pepsi deal done. After that point, you know, it's gone down well over 50%. We hit that low point from back in the beginning of November, right around 100, 105. So we hit that support, and now we're seeing the relief rally, right? And technically speaking, this is not out of the woods yet. Yes, it's a good sign that we are breaking out of the 50 moving average here on the 4-hour chart. We also broke above $115, which we covered this morning on Patreon. And shout out to everyone on Patreon. I mean, we called the stock out, I believe, at 105 this morning. What a crazy rally so far. And yeah, we broke 115. That was the low point from the beginning of January 2021. And now we're right by the 180 SMA, and a level that held all throughout February and March into April as well. That's at about 125, 130, right? That is the next big test here on Beyond Meat. If we fail at this point, we could very well continue the downtrend if we fail at a lower high right there. So be mindful of that. These are a couple of key spots I'm looking at. 125, 130, right around the 180 SMA here on the 4-hour chart. And let's say hypothetically we did take the lows out from a couple days ago at about $99. If we pull up the yearly chart, you should be able to see, or actually no, maybe the 3-year chart, you should be able to see where we could go next. Maybe $75, maybe around on the lower end $50, which would be an absolute buy in my opinion for Beyond Meat, or maybe down to about $87. $87 was that low point from a year ago, back in April, over a year ago, back in April of 2020. So technically speaking, the downtrend is still intact for Beyond Meat. Now let's take a look at some of these ratios, the financials, to see how this company's been doing and whether or not we want to buy this as a long-term investment here or not, or maybe we could play it as a short-term trade. And before we even look at the financials and the ratios, I think this could be a short-term trade. There could be momentum if we break 125, 130, like I said. So I'm going to put an alert right there at about 125 as a potential entry point for a long-term swing or a short-term swing for some sort of momentum. And now let's take a look at these numbers to see what we see over there. Okay, guys, check this out. So what you see right here is quickfs.net, and no, they don't sponsor me. I simply use this website for free myself because it's free and it gives you a bunch of data for free. That's the beautiful thing about it. QuickFS.net here, this shows us the revenue, the gross profit, the earnings growth over the past couple of years, which is what I like to look at first and foremost, especially for a growth company, right? And we can see in 2016, they did $16 million in revenue, followed by $33 million in 2017, followed by $88 million in 2018, $300 $400 million in 2019, and in 2020 the growth slowed down a bit. We did $407 million, which is a big number considering, again, in 2016 Beyond Meat only did $16 million in revenue. So look at these growth rates. Revenue growth of 100% from 16 to 17, 170% from 17 to 18, 238% from 18 to 19, and the stock's revenue growth, or the company's revenue growth rather, fell from 2019 to 2020 to 40%. So the growth rate fell a lot from 19 to 20 compared to the previous year's growth, and that definitely has to do with the CV, everything that went on. And I believe this, and many people agree, this could be a pretty decent opening up play, a reopening play, and not because people are going to buy more of these products in the supermarkets, which could very well happen, but more people are going to go to restaurants and more people are going to be eating out, and a lot of these products are integrated in restaurant menus. And they have a lot of partnerships with Taco Bell, with Dunkin', McDonald's, Pepsi, and the list goes on. And like I said, they're in many restaurant menus. So I believe as we see this reopening, we could see 50+% growth again with this company. And on the bottom line, or not even the bottom line, gross profit, which is not the bottom line, net profit would be the bottom line. Gross profit came in at 33% in 2019, 20% in 2018. We have it at 30% for 2020. Not too bad when it comes to gross margin. And pulling up Seeking Alpha here, let's run through some of these numbers very quickly. We notice this company is valued at about $6.7 billion as of the last close, and today it being up 10-11%. That means it's up over $7 billion now. So this is about a $7, maybe $7.5 billion company as of now. It does not have a PE ratio because it doesn't make money. So in order to have a price to earnings ratio, you have to have earnings, right? So there's no PE ratio. And when we look down here at price to sales, the price to sales ratio is 16, which is arguably a little high, right? It's arguably a little high. And the way that you find this is market cap divided by sales, divided by revenue, right? So let's say the market cap $6.7 billion. What did they do in revenue last year? Do we have that number here? Yes, we do. They did $417 million in revenue. So you would take that 6.72 market cap, 6.72 billion, divided by 417 million. That would give you the price to sales. And quite honestly, I think it is a little high. 16 price to sales is a little high. But then again, you could argue the growth of this company justifies that price to sales. But me personally, I would like to pick it up. If I'm looking at this as a long-term investment, I would like that price to sales under 10, which it was at under 10 about a year ago. I was looking at a chart of their price of sales. It was under 10 recently, right? And who knows? Maybe if the market does correct, if we see an S&P correction, I believe this stock will correct pretty heavily and go under $100. And at that point, that price of sales is going to get pretty attractive, especially if that market cap gets under $5 billion, $4 billion. That would be a very interesting spot for Beyond Meat. And another thing worth mentioning about price to sales, this is a great way to value a company that's growing and that doesn't have earnings, because a lot of these companies, Beyond Meat included, they are spending a crap ton of money on research and development and on advertising. They want to get all the eyeballs out there on their products, and DraftKings is another one of those businesses, right? They have a lot of money going into advertising and just getting the product in front of the eyes of the consumers. And you guys can see here, gross profit, we covered that already, about 30%, which is pretty nice. I like that. And revenue growth, 17% trailing 12 months, which isn't great. But again, I'd love to see that go higher. And I'm going to be waiting to see if this does increase in the coming years, which I think it will with all the strategic partnerships and the reopening here. So I like this stock overall, guys. We have a total cash of $1.13 billion. I like it. I'll be honest. I like the numbers here. I like the growth. I think the slowdown in growth is giving us an opportunity to potentially hop in, but we have to understand that we don't want to overpay for growth, because like I always say, price is what you pay, value is what you get. And a lot of people these days, they don't even care about the value. They don't understand value. They don't give a crap about it, quite frankly. They just want to buy stocks because the business is great. And yes, a lot of these businesses are phenomenal. Amazon, Beyond Meat, DraftKings, Apple, a lot of these businesses are great, but the price of their stocks might not be the best deals. And I'm not saying that DraftKings, Beyond Meat, Apple, Amazon, all of these are overvalued pieces of crap. I'm not necessarily saying that, but you have to understand, price is what you pay, value is what you get, and you have to look under the hood of a company and understand it before you invest in it, right? So that's it. Hope you all enjoyed it. If you did, smash that like button, subscribe to the channel. That means a lot to me. And let me know in the comments if you want me to do another video like this on another stock. Drop a stock down below, and I'll gladly make a video on it. And make sure to check out my Patreon if you guys want real-time buys, sells, option moves I'm making, trades I'm in, thoughts on the markets, morning videos every day, and just more access to me throughout the day. That is on Patreon, link down below. Or you guys can go to patreon.com/DasserFest. That's patreon.com/DasserFest. Don't forget to also get your $30 from M1 Finance, your 2 stocks from Webull. Those are free. Link down below. I'll see you all later on. Thanks again for tuning in. Keep crushing the market. Stay safe out there, guys. Peace out.